yeah, models don't work. Like, well, wait a second, guys. Like, you guys have your own models, right? Yeah, I think Bitcoin's going to go to $1 million, but like, well, that's a model. It may be just like you're pulling it out of the wind. And I'm doing a little bit more than pulling it out of the wind because I'm looking at like these graphs and stuff. You should absolutely buy something with Bitcoin. You should pay for Bitcoin. Go to the one restaurant in Atlanta that accepts Bitcoin and buy a steak with Bitcoin. Take a trip to El Salvador and book a hotel room in Bitcoin. It's good. I think we could get to $1 million within a decade. We could get to $1 million within 5 years, maybe, right? If things play out right.
This podcast is entertainment, not financial, tax, or legal advice. Views expressed represent statements of the speaker in their individual capacity, do not represent the views of Unchained, and should not be considered investment advice. Speakers often have personal, family, or business connections to Unchained, which may include direct financial benefits. Please see our disclosure at unchained.com/podcast.
Hey, everybody. Welcome back to the Bitcoin Frontier podcast. This week I have on Fred Krueger. Fred, welcome.
Hey, Joe. Thank you for having me. I always enjoy reading your tweets, and I've been reading them for actually quite some time.
Nice.
So, yeah.
Great to hear. Yeah, obviously, likewise. I think you put out a lot of great work in the space. We'll jump right into it, though. You've worked at some of the highest levels in mathematics. You've done several successful startups, and you're a pretty good investor. Which of these experiences do you think prepared you best for, getting interested in Bitcoin?
I would say just in Bitcoin, I would say tech in general is kind of the most... is the clearest path to Bitcoin, right? Because I think your approach to Bitcoin is generally people around you who are interested in Bitcoin, right? And so, I found myself for the last 10 plus years since the beginning of Bitcoin. I've been in LA and I've been around people, who are into Bitcoin way before me, So, those are the guys who kind of got me into Bitcoin. So, I've known this guy, Brock Pierce, who's actually chairman of the Bitcoin Foundation. I've known him for a long time, well over a decade. And, he was pounding the table about, Fred, you got to get into Bitcoin. Like, in 2013, and I was like, yeah, okay. I bought a little bit of Mt. Gox. What do you want me to do? Like, it's like, I'm not going to invest a serious amount. And then, he's like, no, I'm decided to go completely full on in Bitcoin. This was 2013. And I'm like, really, Brock? You're like, what do you mean? You're going to just buy a bunch of Bitcoin? What are you going to do? And he was like, well, buy a bunch of Bitcoin and also invest in all these Bitcoin startups. And, and he did, he did exactly that. And then 2017, I think it was 2017, he started Blockchain Capital, And so, those guys were, right when they raised their first fund, they were like, came to me because I was kind of the investor guy. And I was like, they're like, hey, we'd like to, sit down and talk to you about Bitcoin. It's like, it's $1,000 now, like, let's talk. It's exciting, and I was like, yeah, nah, $1,000 seems kind of overpriced, So I think that's how I got, I was around these people. I got exposed to it, but I don't think that gave me the religion, right? You can be around Bitcoin and you can completely not get it. And, my attorney, I have a sort of personal attorney that's helped me out on a bunch of stuff. And he's like, Fred, I got to tell you, I don't know any Bitcoin. And I first heard about it in 2012, and, it's like, he goes, I never pulled the trigger. So what it is that really pushes you over the edge, I don't know. Maybe it's some podcast, maybe it's some guy, something, I'm fortunate that I got orange pills, in roughly 2019, but, that I really got it, but
yeah. Wait, so did you say you bought some off Mt. Gox back in 2013? Like a little?
I did, and sold it to Mt. Gox.
Oh, nice. Oh, interesting.
Yeah. Look, it was like, it was like $200 at the time, and a bunch of us, and I had a bunch of friends in Switzerland at the time, and we were like, yes, this is pretty cool. $200. It's the new money, blah, blah, blah. And we're like, okay, I didn't buy a lot. I bought like $1,000 worth, 5 Bitcoin, but, I sort of seemed like, okay, this is like a completely pointless thing. I'm not going to spend more than $1,000 on something as stupid as Bitcoin,
Do you remember
that was my thinking, at the time.
Do you remember
and
why you sold it?
Why did I sell it? Because it doubled, I was like, great. Now take my money out of this piece of trash. It doubled, great, So,
yeah.
I mean, there's a lot of people like that. I was talking with this guy, Bram, from Bitcoin for Millennials. He's sort of same kind of time frame, bought it, but he sold it at like $5,000, the stuff he bought in 2013. So,
yeah.
I mean,
that's
I think that those things are it doesn't really give you any additional alpha by buying and selling early. I just think somehow you've got to get orange pilled into why this thing is a reasonable place to park some of your hard-earned cash. And, that is it's not easy, especially as you get older, because the learnings are making money is really, really hard. You don't want to lose it. Right. And, why is this thing different from any other get rich quick scheme out there? And, I think and then you're sort of like, if it really is just some kind of Ponzi scheme, why should I put any of my money in there? Why I don't want to lose 1% of my money, great. Like, why would I do that? And so I understand, I definitely understand the holdback of people who don't want to invest in Bitcoin. I don't understand it so much with younger people, but I definitely understand it with people over 50, Yeah,
I totally agree with that. I mean, I doubted Bitcoin for, the first initial moments when I discovered it, for sure. The first few months, I was like, it just kept going up. And I was like, how does this even make any sense? What is it? Like, I was used to stocks, right? Where you buy Coca-Cola and you earn 3% dividend forever, and it goes up 1% a year. But I was like, what's this Bitcoin thing? It's not, there's no dividend. It's a pet rock. What's it worth? So I can definitely see how people get stuck on stuff like that.
Yeah, I mean, it's so different from anything else, right? Everything else, you can kind of put them in the sort of similar bucket, right? Like, even Amazon, right? When it came out, it was sort of like losing money. But you go like, well, someday they're going to, someday this e-commerce thing's going to work and it's going to be profitable. They're going to make money, right? So, there's all these examples, of some way to value it. But, with Bitcoin, there really is no PE model. That model just doesn't work, right? So, you have real estate, you could sort of say it's more like gold, right? And that's where I think people have kind of at least put a framework around this model, like, well, gold is worth X. Bitcoin is like gold, so it should be worth, X over 2 or 2X or whatever it is, right? So that model, I think people can kind of vaguely understand. I don't think it's even a correct model, but I think people can kind of get their head around that model. But when you compare, Bitcoin to the S&P 500, it's a pretty big jump there. So
what do you not like about the comparing it to gold model? What's the problem with that in your view?
I think the big problem with that is that gold it's really not been a useful thing for a very, very long time, right? I think gold was money in the 19th century, right? So I think, if you're looking 100 years ago, yeah, gold was kind of money, right? But gold ceased to be money a very long time ago. People say, well, you can't buy stuff, you can't buy coffee with Bitcoin. Well, you certainly can't buy it with gold either. You know what I mean? You can't do anything with gold other than bring it to a pawn shop and exchange it for dollars, right? That's about all you can do with your gold right now. So it's, I just feel like gold is not very useful. There's not really any scenario where gold's going to become like the global currency of the world in the next 20 years, right? There's no growth curve to gold. There's no adoption. No, people aren't adopting gold, So I feel like, on the other hand, Bitcoin is absolutely gaining an adoption. Absolutely. By all these metrics, more and more and more people are using Bitcoin to store money, right? And I think that, there's a clear growth curve to Bitcoin, not just to the price, but to the actual adoption of Bitcoin. There's growth in kind of Bitcoin technology, wallets, Lightning, a lot of things now, layer twos. So there's Bitcoin has this growth story that gold just doesn't have. And so, I feel like the gold guys are just, they're just kind of like yearning for a world that never, wasn't even around when they were a kid. It's maybe around when their grandparents were kids, but it's just kind of like science fiction, at this point, like I don't see that it's a gold. I mean, gold is just not a contender for anything that's kind of in the 21st century, in my opinion. It's like this ancient, I mean, I kind of agree with Keynes. It's a barbarous relic, of a bygone era, So it's kind of cool. I mean, I own gold, but, I mean, I'm not selling my gold that I own, but, it's, I wouldn't recommend anybody buy gold here, no point.
Yeah, I definitely agree with that. I would never allocate a significant portion to gold. I don't think it really makes sense, especially nowadays. No. Let's talk about, what you mentioned earlier about orange pilling the world or getting more people to really buy into Bitcoin. I feel like models historically have been something that people have gravitated towards. Like, I know you don't like the stock to flow model, and I definitely agree it's not perfect, but I think like back in 2018, 2019, a lot of people did look at the model and it helped build their conviction.
2019. I think it came out in 2019.
2019. That bear market time period. And now we have power law model, which I think Giovanni had published, a version of it in the past, but now he's like really talking about it again. How do you think about
I'm happy that I'm helping out that model. Like, I definitely feel like I've had an impact on the power law discussion because it's kind of like I didn't hear about Giovanni first. I saw my friend Stephen Perrinode, who's been tweeting about this stuff for years, right? And he's always had this power law. And I was like, okay, Stephen, this is kind of cool. You're looking at things on a log basis. And he was like, yeah, power law. And it didn't really click. But then I was like, went back to it and I was like, I really love this power law stuff you're doing, Stephen. And then I published I put this thing out on Twitter and then Giovanni just chimes in. He's like, wait, that is my power law. I'm like, really? And he's like, yeah, I discovered it in 2014. So I'm like, great. You're a physicist. He's got this power law. You speak my language. Let's talk, man. And so I felt like, when I, and then I get along really well with Giovanni because we can kind of like, we speak the same kind of language, and so, I talk to him almost every day now, and I'm just like, what do you think of this? He's like, Fred, like I found this new relationship. And I'm like, okay, maybe, but so I definitely think the models I think the power law model is the best way to look at Bitcoin. And it's not just a model of the price, right? It's a model of everything that's around Bitcoin, right? And I think that's it will give you, anybody who spends a significant amount of time with this will give you a lot of conviction to hold Bitcoin over the long haul. It's like the best reason because here's the way I would describe it. First of all, let's just look at adoption, right? Because if you're buying into Bitcoin, you fundamentally believe that more and more and more people are going to be using Bitcoin, right? And the power law, you can start looking at, okay, how many people have 1 million sats? Okay, well, you can look at those addresses, right? You can look at them and you're like, okay, there's, 17 million people who have, 1 million sats, 17 million addresses. And you can't say, well, people can have 2 addresses. Well, that's true, but the number of addresses is out there, right? It's out there on the blockchain. Now you can look at that number leading up to today when you have 17 million of them. And you're like, oh my God, this thing goes up at a power of 2.5, right? Roughly. And it's very consistent. Like it's like if you put it in log space, it's like a line with a slope of 2.5. It's really consistent. Then you're like, okay, well, that's great, but that's not very much Bitcoin. What about if I took, 0.1 Bitcoin? And you're like, okay, slope is now 2. Okay, what if I took 1 Bitcoin? Slope is now 1.4. And what if I took 10 Bitcoin? Well, the slope is now 0.7. So you have these power laws. Every single one of these things is a power law. And you're like, okay, well, that's not chance, right? Now you take those numbers that I gave you, 0.7 for 10 Bitcoin, you take 2 for or 1.4 for 1 Bitcoin, 2 for 0.1 Bitcoin and 2.5 for 0.01 Bitcoin. And then you plot those against Bitcoin and you find it's a power law again, going negative power law, right? So now you got power laws of power laws. Okay. So the adoption is clearly a bunch of power laws, right? It's just, there's no question. And by the way, this doesn't change whether the market's going up or down, right? It's just consistently adoption that's happening. Now you look at hash rate. Hash rate itself is a power law, right? Hash rate's going up at T to the power 12. And the correlation is amazingly good. It's like 98%, right? So hash rate is T to the power 12. Then you look at price. Well, price is actually a power law too. And as crazy as Bitcoin looks like, if you just look at it in linear terms, right? You're like, wow, this thing went up like crazy in 2017, right? Did a 20x. Then it crashed and went all the way down to 3,500. Then it spent 2 years like on the floor. Then in late 2020, it bounced from 10,000 to 60,000. Then it spent 1 year there, double top, puked, went down to 15,000, and just 12 months ago, kind of resuscitated. That vision. Most investors look at that and they're like, well, that's way too volatile for me, man. I do not want to have anything to do with that kind of, circus, right? But if you look at it on a long basis, like, oh my God, this thing is actually pretty steady, right? It's pretty steady. The drop from, even the drop from, in November 21 from, 69,000 to 15,000 fits the model. It's not even outside the model at all, because we were like 2x overvalued. We were sort of 2 standard deviations above trend line, and we went 1 standard deviation below trend line. And if you look at that, means and this is a very non-intuitive thing, but if you look at what a trend line looks like in 1 standard deviation in logarithmic terms, it means doubling, right? So 2 standard deviations above it means 4 times as much as trend line, and 1 standard deviation below means half. So 4 times to 1/2 is 8x, right? So that's an 80% drawdown. So, you're like, how can this thing be in a power law if it has 80% drop times? Well, it can, because you went up from overvalued to undervalued, and that's 80, you get an 80% drawdown. So again, it's not crazy when you look at when you're looking at the stuff in log space, it doesn't look crazy. But I agree with you. A lot of people got in trouble with the stock to flow. And I will say this about stock to flow. The reason they got really in trouble is because they basically looked at the lower bound and they said, can't go below this price. Well, it's a model. Of course it can go below this price. There's no, it's not like written in stone that like you can't, even like power law, it's never gone below 1 standard deviation from trend line. Could it? Yeah, it could. Why not? Go to 1.5. Well, so what? Still not crazy. It's like it's a model. It's kind of amazing that it hasn't gone below 1. You know what I mean? Normally, you would think in a normal statistical sense, 1 standard deviation would be 67% of the time. So you'd expect, 33% of the time that it's below 1 standard deviation. Now, it hasn't gone there. It seems like it's a little less prone on the downside than on the upside. So it goes up more than it goes down. But, I think everybody got, confused by their sort of say, it can't go below this line. And then they levered up and then they got wrecked. So that was a bad move, right? And then I think the other thing which is wrong about it is it sort of says that the fundamental reason why this thing works is because of scarcity. And I think that's almost a philosophical thing that's wrong with it, because, other things are scarce. Litecoin is scarce, and Litecoin has the same halving schedule as Bitcoin, right? It's equally scarce to Bitcoin. Now, people are like, well, Litecoin is different, Fred. It is, but mathematically it's the same thing, right? So is testnet Bitcoin, by the way. You know what I mean? Like, so is Bitcoin Cash. But clearly Litecoin is not a power law, because it's still below where it was in 2017. It hasn't gone up, right? So these things are not the same. And, it's not true that scarcity is the only reason things go up.
In this frontier moment, Fred is suggesting that scarcity isn't the only reason Bitcoin goes up. I think he's definitely correct here, but I personally would argue that miners selling Bitcoin has a real marginal effect on the price of Bitcoin. Over the last 12 months alone, $22 billion worth of Bitcoin was mined. Now, Bitcoin is the best monetary tool due to its superior monetary properties. It's portable, durable, divisible, credibly scarce, lacks future uncertainty, obtained the best network effects, had no pre-mine, and initially all coins are distributed through proof of work. That's a lot more than just scarcity and a high stock-to-flow ratio that makes Bitcoin valuable. But with that said, perfect scarcity or an immutably fixed supply is very important. And now back to Fred.
And I think Giovanni's pointed that out. Now he's not necessarily the most he has a little bit of rough edges around his PR delivery of some of this stuff. And people are like, how can you say scarcity doesn't matter? That's why we buy Bitcoin. So I understand people are like, Giovanni is too much, but he's trying to make a point that scarcity isn't the only driver, right? It's why is Bitcoin great? Because it's a scarce asset. Yes, very important, but it also has network effects. It was the first asset, and it has advantages over copies of Bitcoin like Litecoin or Dogecoin, right? Which are just copies of Bitcoin essentially, right? With some changes, like Dogecoin doesn't even have a cap. So, but whatever Litecoin does and Bitcoin Cash does, they have caps. But scarcity is one of the factors. It's not the only factor. And at the end of the day, I just think Bitcoin is working. It is the default cryptocurrency. And, Saylor is right. There really kind of is no Pepsi to Bitcoin's Coke. You know what I mean? Like, it's not like Ethereum is Pepsi, and Ethereum is kind of RC Cola, in my opinion. I think it has some value. RC Cola does exist. You can buy generic cola in Whole Foods or Walmart or wherever you want. You can buy colas that are not Coca-Cola, and people do buy them and people drink them. But Coke has the majority of the market share, and I think that from the just purely on a brand basis, I think Bitcoin's going to win. That's my opinion. So I don't quite agree with you that Ethereum is going to zero, against Bitcoin. I think it's going to go lower against Bitcoin. I don't think it can sit out at, 0.05 forever. I think it's going to go lower, but I don't think it's going to go to zero in our lifetime either. I think it has things like Ethereum and Solana. They're just going to be substandard investments. They're not going to be as good as buying Bitcoin. You can still make money with them, maybe, but there's no reason to own them, really, in my opinion.
Yeah, I agree. There's no reason to own them. I definitely think they'll trend towards zero Bitcoin. I also agree. Like in the next 5 years, they're probably not going to be worth actually zero, of course. But I think
even in the next 20 years. I mean, look, Ethereum there's a lot of people. It has a growth curve. It's just it doesn't really have it, and it will be useful. People will continue. I do not like Ethereum. Okay, so I'm not an Ethereum. And I don't own any Ethereum, but I do recognize that I have smart friends who own Ethereum. And I do think, I do think it's going to continue. And I don't think it's going to become like Bitcoin SV, which I do think will become worth zero, right? That one I think will be worth 0.0. I think there won't be any miners. It'll stop working. But I think Ethereum will continue to work. It's just, it's sort of like one of these smaller religions. There's Christianity, there's, Christianity, there's the Islam, and then there's like Zoroastrianism. You know what I mean? Like, there are people who are Zoroastrians. I don't know exactly what that entails, but there are some people, significant amount of people who are Zoroastrian. And, so I think it's a belief system, and I think it'll continue to go. Yeah. But I don't see any reason to like spend too much time on it, because I don't think it's the problem it's solving is not the big problem, which is money, right? And that's the that's the thing that's going to get us to, that's the thing that's going to change the world. That's the thing that's going to change the economy. And it's going to have by far the best risk reward of any other asset. So I do not see there's any chance in the world that Ethereum becomes the world currency. I can't I could be wrong, but I don't think it's sufficiently decentralized, and sufficiently, I can't imagine that it becomes the world currency. So
yeah, I definitely agree. It's just certainly not better than Bitcoin.
No,
side by side. I do want to ask you about back to the power law real quick.
Yeah.
Do you think that those power laws, whether it's the price of Bitcoin or the addresses or hash rate or whichever metric that you're looking at, do you think that those are like mathematical laws, or do you think that those are just like patterns, or do you think it's something in between?
Well, there's this really good book which I'm listening to now, which I would recommend to you, but it's called Scale by Jeffrey West. And Jeffrey West is the is the head of the Santa Fe Institute. He's a physicist, and he wrote this great book on scale, right? And it's all about power laws, right? It's all about power laws. And he takes examples for example, cities, right? Cities grow according to power laws. And if you look at kind of the amount of electrical wire in a city, or, the amount of patents per capita in a city, right? All these things are power laws, okay? And the bigger the city, the more patents per person, so people are more productive in big cities. So, and you can look at, the bigger the city, the more productive they are. And there's actually a relationship, also the wealthier they are, right? So the more crime there is, right? So there's all these things like crime statistics, patents, wealth per capita, et cetera. They all grow with cities, and cities don't die, right? So, companies die. Companies actually tend to have lifespans that are similar to humans, or shorter, right? Most companies die within 10 years. Most public companies die within 10 years, believe it or not, So, look at the companies that were around in the 70s. None of them are around. Burroughs, Honeywell, Westinghouse, you know what I mean? They're not there anymore, right? Now, the S&P rotates them in and out, right? So, you sort of see, but like companies die, people die, all animals die, but cities go forever. And, London was there in the Roman eras, and it's still going, right? It's going big as ever, right? Tokyo, all these things, Atlanta, everything. They're sort of immortal. And so are they patterns, or are they mathematical law? They're patterns, but all these any kind of complex network, right, tends to exhibit these kind of very stable relationships, right? And animals are a complex network. You're a complex network of cells. You have trillions of cells that make up you, right? And cities are networks of people, infrastructure, plumbing, all this stuff. So when you have this complex network, they tend to exhibit power laws, and they tend to either scale up or down, right? And when they scale down, they tend to die, right? Because at some point you can't get bigger than an elephant, right? Like there's nothing that stands on 4 legs or 2 legs that's bigger than an elephant, and you sort of run into problems, right, with scaling problems with elephants. But, cities don't have those scaling. Cities can get bigger and bigger and bigger. And it's likely that cities will just be like, 100 million people in the future. You know what I mean? Like so I think these power laws are more than just mathematical, aberrations, right? I think there really is some very deep significance to how these things evolve. And I think it's probably likely, if I had to guess, that the Bitcoin power law will probably continue pretty much intact for the next 20 years, if I had to guess, right? Now, I think ultimately it sort of turns in more into an S curve. And, once we hit full Bitcoinization, then it's not going to grow at, 20% a year anymore. It'll grow at, 5% a year, which will be the growth of the economy, right? The growth of the world. But, we go from 40% a year to 20 to 30 to 20 to 10, 5, and that's kind of what a power law is. And at some point, this sort of very smooth, almost exponential growth tails off, has an inflection point, and peaks off like that. But I think for all practical purposes, we're almost in an exponential phase right now. We're quasi-exponential. We're growing at 40% plus compounded right now. That's where Bitcoin is. Now, stocks do not grow at 40%. They can grow at 20%. Like in the last decade, they grew at 20%, right? Which is enormous, right? This is 20% growth is just, 20% growth, you multiply 5x in 15 years, right? Which they did. Stocks from 2010 till now have 5x'd, right? But, they don't 5x over all periods of time. They 5x over the best period. And we've had the best period for stocks almost ever, right? Could we go up another 5x from here? Maybe. But we could also go down 2x from here, But I think Bitcoin, if I had to guess, the chance of Bitcoin 10xing from here is really strong, right? Like these very, very high probability that Bitcoin 10x's from here over the next decade, or, could do even more than that, right? But let's just say that number, right? So we go from 70,000 to 700,000 in 10 years. I would say pretty good chance that we do that, right? So, I really think you can kind of take that to the bank, and I think if you're planning on, you should have a 10-year time frame. If you're investing, you should have a longer term time frame. Just like, whether it's you're investing in Bitcoin or you're buying a house, I've owned this house for 10 years, but it's, I think you need to have a longer term time frame. And I think you have to ask yourself, what else is how are my other assets going to do in 10 years? Right. You buy a house. I think if you buy a house, you're lucky if the house doubles in 10 years right now from here. I think if you buy stocks, I think they may double, but that would be kind of like my guess. Like I would not count on more than a double from here because you're kind of getting them in at a very rich point, and it could go down, right? If you buy, put your money in just cash in the money market, you're probably going to make 30% after tax in 10 years. But again, now all these things you're going to have to discount relative to inflation, and there will be inflation, right? Now, how much inflation? We don't know, right? It might be really bad. It might be 15% a year, right? Like it was in the 70s, right? It might be probably not going to be much lower than 7% a year, I would say, given kind of where we are. And so now you're in a position where your cash is going to be pretty much a guaranteed loser, right? Putting your money in the bank you're just going to have a lot less of it in 10 years, probably half of it. If you put your money in stocks, if you're lucky, you're going to break even, maybe. If you put your money in Bitcoin, probably going to 10x your money, even after tax and after inflation. So much better of an investment opportunity in Bitcoin than in stocks, bonds, or real estate. Now, can you handle the falls? Can you handle another bear? There will be another big bear market. You can guarantee it. I've lived through two of them. I've lived through 2017. It was pretty bad. I remember sitting there and I had one of my investors come in and it was like, Bitcoin was trading at 3,500. And it was just like, oh my God. And then, you read about Craig Wright, saying that he's going to flood the market and he's going to burn Bitcoin. And then, then this last bear market, which, I had a lot of Bitcoin, bought a lot of Bitcoin in 2019, 2020. And, you have these massive, 8-figure kind of, drawdowns. And you're just going, oh my God.
High net worth Bitcoin holders could be leaving a lot of money on the table if they don't have a sound financial plan and tax strategy. Sound Advisory is a leading financial advisory firm for long-term Bitcoin holders like yourself. They can help you maximize your Bitcoin wealth while navigating the complexities of the legacy financial system. Don't get killed on taxes. Check out Sound Advisory at thesoundadvisory.com for more information. That's thesoundadvisory.com. Now back to the show.
Wait, did I actually just lose that much money? And, yeah, you did. You know what I mean? On paper, you did, But the good news is if you hodl, you didn't. And, I made a lot of money on paper, but I'm not cashing out. And so, I think that, I just think that, from a risk return point of view, it's, the real question is what's your temperament like? Can you stomach big ups and downs, and if you can stomach them, and the other variable I think is like, how badly do you need money? Like if you have a job, and not everybody who's a Bitcoiner has a job, right? A lot of them don't, right? They're just holding Bitcoin. But if you don't have a job, you may need cash at the wrong time, right? That's the problem, right? You may get hit by a car, you may get in a car accident, and all of a sudden you need 50 grand. Well, if you need 50 grand and it's January of 2023, what are you going to do? And you have $50,000 worth of Bitcoin, you're going to sell all your Bitcoins, what you're going to do, right? And that's the problem, right? The problem is you may need cash exactly at the wrong time. So I think, having some kind of emergency fund is useful. You know what I mean? And I think anybody, even the most bullish Bitcoiners, I would say, before you kind of go all in, get a little bit of an emergency fund, right? Just so you can weather out losing your job, getting hit by some, drunk Uber driver, you know what I mean? Whatever it is, just get a little bit of margin of safety and then then go in maybe 50%, but you don't need to go 100%. 50% is good enough. If this asset does what I think it's going to do, if you're 50% and you're going to, and it doesn't really matter if you're young or old. It just means, do you have 10 years ahead of you, right? If you have 10 years, you can wait and you can hold. And I don't care if you're 50, 60, 70 or 20, right? Right. If you've got 10 years ahead of you, you probably will see Bitcoin 1 million, And so that's where I am on this. I think it does definitely pay to be a little bit aggressive. And I would say you should not try to time the market. And, if you have steady cash coming in, then you should just DCA it. Great. It's fine. If you don't have steady cash coming in, you just have a bucket, I just put it all in right now. That's what I would say. If I were advising somebody, somebody comes to me and says, Fred, I got 100 grand. How much of it should I put in Bitcoin? I'd say, just put it all right now. And they're like, well, should I time it? Should I do? No, just put it now in Bitcoin. Doesn't matter what's price is 69,000. Put it in 69,000. Doesn't matter. Because I see a lot of people saying, somebody on my timeline yesterday was saying, Fred, I follow you. I love all your stuff, but I'm not buying any Bitcoin because I think it's going to go down for whatever reason. I don't know what pattern he saw in it. It said it's going to go down to 50,000, then I'm going to buy. Well, of course, the minute he posts that, the thing goes up from like 67 to 69,000. So, if he didn't like it at 67, he's not going to like it at 69, right? For sure, right? So clearly now he's just going to be sitting there waiting for. He probably adjusted his thing. Well, if it goes to 60,000 now, but you're trying to be too cute, and you may never buy it. Again, if it's going up 10x, it doesn't matter if you bought it at 50,000, 60,000, 70,000, 80, or 100,000. Doesn't matter. The only thing that matters is, did you get in? That's the only thing that matters, right? So that's my opinion. Is it's just you. Somebody also posted, which I really like this comment, says, don't wait to buy Bitcoin. Buy Bitcoin and then wait. I think that's really true. Just jump in, accept the fact that whenever you get in, it's going to be volatile. Whenever you get in, right? So you're about to jump on. It's really like jumping on this like roller coaster, right? You're going to ride this roller coaster. There will be gut wrenching drops, but then the train will chug higher, and then it'll gut wrenching drop. But jump into it, realize that that's what you're signing up for, and learn to live with that. You know what I mean? Because I think that's kind of the temperament that you're going to need to make a lot of money in Bitcoin, in my opinion. And whatever floats your boat as far as understanding it, if you want to read the Bitcoin Standard, if you want to watch every single video of Michael Saylor, if you want to study math and the power law, whatever works for you, great. And, look, I think that from my perspective, if I can just convince some people, I get a lot of satisfaction out of that. When some people are like, hey, Fred, I really liked your videos, and, it's helped me get a little bit more conviction. I personally get a lot of satisfaction out of that, but as I'm sure you do, right? From having people say that on your YouTube.
Yeah.
That's kind of why I'm doing it. That's what gives me satisfaction.
Yeah. I like that. Yeah, I definitely agree with what you said. It doesn't really make any sense to be 100% in on Bitcoin because the volatility does exist. And I think like Trace Mayer has brought this up, but you want to be the guy that's buying Bitcoin in January of 2023. You want to be the guy that has something on the sidelines that's outside of Bitcoin. And you want to be the one that's basically putting in the bottom of the price. And if you're all in on Bitcoin already, it's like, well, someone else is going to have to do that because you can't do anything about it unless you borrow against your Bitcoin, but then it could keep going lower. So
yeah, but you don't need to be, nobody's like measuring your record, this is a battle you're having with yourself. You know what I mean? So it doesn't matter. Like there's no prize for like low ticking some like thing or buying it. See, you don't really need to do it. And, I just think what you need to do is you need to get in this mindset of, I love this asset. I love what it is. I want to understand it as best possible. And part of that to me is like, okay, really start using it a little bit. You know what I mean? And, some people like British Hodl said, no, you should never use Bitcoin. I'm like, no, you should absolutely use Bitcoin. Like you should get a Lightning wallet. You should get every single Lightning wallet that's out there, right? You should mine Bitcoin. You should run a node. You should do all these things, right? You should do multi-sig, all these things you should do. Why? Because they're going to help you understand this thing and they're going to keep you up to date, right? Because if you just do a single sig Bitcoin, you put it in your safe and you forget about it, well, guess what? 3 years from now, you may have realized you wrote down your seed phrase wrong, right? And your Trezor stops working, right? Like, this is like you gotta. It's like if you're flying a plane, you gotta. Used to be a pilot, right? And you got to do checklists. You got to take out your plane. You got to be current. And I think with Bitcoin, it's the same thing. You got to stay active. You got to keep sending, receiving, all this stuff. And that I think is you don't have to do it with large amounts. But you should do it. You know what I mean? You should absolutely buy something with Bitcoin. You should pay for Bitcoin. Go to the one restaurant in Atlanta that accepts Bitcoin and buy a steak with Bitcoin. Take a trip to El Salvador and book a hotel room in Bitcoin. It's good. This is the kind of stuff that'll get you more. It's good not just for indoctrination, but it's good for just like your familiarity with what Bitcoin really is, in my opinion. You know what I mean? And so I encourage people to do that. I understand not everybody's going to do that. And there's a whole class of investors who just want to buy the ETF and they're never going to want to understand what Bitcoin is. Well, I think they're missing out on something, but it is true that if you buy IBIT from BlackRock, they're going to do a pretty good job of keep safeguarding your keys, and you can trust them. I own IBIT. I own several of these things, right? I own IBIT, I own FBTC, and I own BITB, the Bitwise one.
In this frontier moment, Fred is suggesting that IBIT will do a good job safeguarding your keys. First, a minor point of clarification. Coinbase holds the keys to the IBIT ETF, not BlackRock. BlackRock has no private keys to any Bitcoin within the IBIT ETF. BlackRock holds a Bitcoin IOU from Coinbase. While some people hold Bitcoin via an ETF wrapper, most Bitcoin is held in some form of self-custody. If BlackRock wanted to potentially upgrade their security and custody resiliency, they could consider adopting a form of collaborative custody. This could eliminate Coinbase or any institution as a single point of failure for client Bitcoin. Unchained is already helping clients do this with our enterprise custody product. Maybe BlackRock and others will begin to follow our lead. And now back to Fred.
But most of my money most of my Bitcoin is, actual Bitcoin, So, and I would absolutely recommend a multi-sig like Casa or Unchained, 100%, right? And I've met, Drew, the founder of Unchained, had a great conversation, loved it. I intend to put some of my Bitcoin on Unchained. I have yet to it's a little bit of a process, right? Because, you need, I've got, I have a sort of 3 out of 5 with Casa right now. And, it's like, that means that you have 3 devices, right? So, and, plates and everything else, right? So, but if you don't have one of these, either Casa or Unchained, and there's other ones too, but those two are both very good. Both very good. I've tried Unchained. I know how it works. I've used it. Both of those are very good systems, and they're both. I definitely think if you've got a significant amount of Bitcoin, you should do one of those two, 100%, or an ETF. But I would not recommend people do single sig for. I mean, actually, I would recommend they do single sig for some of their Bitcoin. Because I think it's good to have both. I don't put everything in one place, but I definitely think, what a lot of people, I was trying to multi-sig Larry Lepard a couple years ago, and I met him at Pacific Bitcoin, not the last one, the one before that. And I was like, Larry, you got to get into multi-sig. And he's like, why do I want to do that, Fred? And I'm like, well, look, Larry, it's like, I said, right now, you probably have your plates buried in your backyard. And he's like, how do you know that? And I'm like, you're a gold bug. That's what you do if you're a gold bug, right? And so I'm like, yeah, but like somebody gets one of those plates, they get your Bitcoin, right? So you need, you need to kind of go through that. And it's the learning curve from single sig to multi-sig is a significant one, right? And, but I recommend everybody's got more than, 5% of their net worth in Bitcoin. You should do that. You need to make that next step to multi-sig. But, and all these things just increase your resilience. And I think, about, which is the most important thing, right? The most important thing is not to sell your Bitcoin, is to save your Bitcoin correctly and then not sell it. Those are the 2 golden rules, Don't screw up your custody and don't screw up by selling your Bitcoin. Those are the 2 things you have to figure out.
Yeah, I like that a lot. Yeah. I definitely agree. I mean, collaborative multi-sig is what's going to help you eliminate a single point of failure with your Bitcoin, whether that's, an individual or an institution or whoever. I feel like it's the best way to hold Bitcoin. I do want to ask you real quick back on the power law.
Sure.
Where do you think that might fail, or where would you suggest that there's like a phase shift in the model, or the model just isn't useful? Like if, Bitcoin's at 7 million in 10 years instead of 700,000, would that break the model? Or would 70,000 in 10 years from now, would that break the model? Like, how would you evaluate whether the model is no longer useful?
First of all, I think it's very unlikely that this model breaks. Okay. I would just say I would estimate this chance of this thing breaking is like, I don't know, under 10%. Okay. Like, I think this is very unlikely. And, what I think you have to realize, the model is pretty wide, right? So what the model says is, okay, I don't know exactly where we are right now, but let's just say 69,000, right? The model says, and the trend line, we're a little bit above trend line right now, So the trend line is like 60,000, right? Or a little, maybe even 55,000, right? We're just a little bit above trend line, like 10% above it right now. Right? Let's say 60,000 and we're 10% above it, right? So the model says we could go all the way down to, but the model says we're going to probably get to about 100,000 trend line by the end of the year, right? So if you look at kind of by the end of 2024, if we're significantly below 50,000, that's more than 1 standard deviation, right? So if we go down to 25,000 by the end of the year, that'd be 2 standard deviations. We've never seen that. I still don't even think that's a break in the model. I think that's just an area that's 2 standard deviations. That's not 2 standard deviations is not crazy, right? If we saw 2 standard deviations above us, okay, if we get to 100,000 trend line by the end of the year, 1 standard deviation is 200,000. 2 standard deviations is 400,000, right? So if we hit 400,000 by the end of the year, guess what? we're exactly in the model, right? We're in the model and we're kind of somewhere like 2021, January, right? Or we're like 2017, December, November, December, right? Yeah. Do I think we're going to get much above 400,000? I don't, I don't think we're going to get to $1 million a coin this year or even next year. I really don't, I think if we do, I might be like, first of all, if we do, I'm ecstatic, right? Because I guarantee you, no matter what happens, I still will have, in any scenario, I will have half of my Bitcoin for the next 10 years. Like there's zero chance. There's no scenario where I sell all my Bitcoin. Even if we get to $1 million a coin this year, I'm not selling all my Bitcoin. That's not happening, right? I might sell some at $1 million, but I won't sell none. That's not a possibility. So I don't think that we're likely, I just don't think we're likely to break this model. I think the bands are pretty wide. And, I just don't see that I think we're on a Bitcoin adoption curve. We're still at, 1% of the world population, has any kind of significant amount of Bitcoin. Maybe it's less, So look, I think we're in this like early growth phase, and it's just sort of like a viral growth model that's likely to continue. I don't see anything. I don't think anything in the next 10 years is going to do much to this model.
Yeah.
I sort of would say stick with this model is a model you can probably trust, but the model on the other hand does not suggest that, we aren't going to go back down to 50,000 and stay there for 2 years. We could be in the model, right? So, it's not really a tradable model. All it is a model that can give you conviction to hold for the longer period. And I would say it does offer value because I'm not going to pick on Swan Bitcoin because I like those guys, okay? But they're coming out with these statements, right? Like Corey and, Steven, like, yeah, models don't work. Like, well, wait a second, guys. Like you guys have your own models, right? You talk to Corey and he's like, yeah, I think Bitcoin's going to go to $1 million, but like, well, that's a model. You don't, maybe just like you're pulling it out of the wind. And I'm doing a little bit more than pulling it out of the wind because I'm looking at like these graphs and stuff. So I would argue my model's better than their model, right? I would, Steven, my model's better than your model. And the only reason it's better is I have a statistical background. I can look at the statistics. I can understand the growth curve. You can look at it too. And yeah, you've been looking at it very intently for a long period. You've been in Bitcoin and everything else. But at the end of the day, you're interpreting statistical price data. That's what you're doing, right? Now, you can either interpret it like a statistician, right? Or you can just sort of get this sort of fuzzy mentality, right? And, I'll just say that there's a lot of value to actually having, actual experience. Like when I did my PhD, I spent 4 years with this guy, Tom Cover, in the stats department at Stanford. And Tom was this, he's dead now, but just an amazing guy. You'd walk into his office and we'd always smoke these cigarettes and talk stats and he was also really into investing. You can see some of his stuff that's still online, right? That's out there. And, we'd always sit there and talk about stocks or something else, and he'd be like, oh, Fred, there's the St. Petersburg paradox of this and that. And then like, what do you think of this? And when you're used to modeling stuff like that, and that, that kind of background, led me ultimately to Wall Street, right? Where I, used models of, random processes, which were called Ito calculus and, for modeling fixed income, right? And, we made a lot of money with those models, a lot. This was a very, very profitable business for us. And so, I spent more than just the 4 years at Stanford, right? I spent another 6 years in quantitative modeling on Wall Street. So I have 10 years worth of modeling data, right? 10 years, and 6 of them as it related to investment, So when I see something like the power law and Giovanni's, I'm like, okay, forget about the other stuff. That's where we have to focus. We have to focus on this power law. So, that's what I would just say. It's really all about, hold on one second.
Okay.
1 second. No problem. But anyways, that's what I would say. So I think that, I think this power law is the real deal. It's not the only thing. There's, it's a thing that out there, and I think this power law has influenced, if you look at kind of why the stock to flow worked, it's kind of because there's this power law, right? That's why it worked, and I could explain it in sort of mathematically, very simple. It's like, you look at stock to flow, right? Stock to flow in Bitcoin, right, is literally a function of time, right? Because it's programmed that way, right? It's like every halvening, right, the flow part gets cut in half, right? And so the stock part increases like that because there's more and more flow. And then at the halving, it jumps. So then it goes up like this and jumps. Okay, so stock to flow is correlated with time, but Bitcoin price is a power law of time. Therefore, stock to flow is correlated with time, right? It's just, it follows, right? Now, if you look at the past, they don't give necessarily that different data. If you look at the next 20 years, they give very different data, right? And I would argue that the problem is the stock to flow over the next 20 years is a little too optimistic, I would say. It'll diverge with the power law. And I think that's not accurate. I think it's giving people a little bit too much hopium. And I think you can look at kind of plus there's multiple versions of the stock to flow, which make it even more problematic. They're sort of like, I joke, old Coke, Coke Classic, and New Coke, but like, if you look at kind of the current model that's like on the stock to flow website, it says, we're going to go to, I don't know, 10 million in the next 5 years, by the end of the decade, right? It's like, I think that's not accurate, guys. I think that's again, if it does that, I'm super thrilled. I'm happy to be wrong. I just don't think that that's really in the cards. I think we could get to 1 million within a decade. We could get to 1 million within 5 years, maybe, right? If things play out right. But let's not try to jinx this thing. 1 million is everybody's like, Fred, you're too bearish. Like, I'm saying it's going up 15 times. It's not bearish. 15 times for an investment, that's the best performing investment of all times. So like, this is a very good investment. But so a lot of people were attacking me because of this, and I was like, but also it's like, and people were saying, well, Michael Saylor said all your models are going to be destroyed. But like, Michael Saylor works for a company that produces analytical models for business. That's what he does. That's what he's been doing for 30 years, right? Is producing models for business. And by the way, when Saylor first did, all his videos were like, well, if you look 4 years and you hold it, you couldn't have lost money. If you look 6 years, like, he's looking at it from very much the same lens as Giovanni or me, right? We just happen to be looking at this mathematical log thing. Saylor has enough background to do this, He has, I dug up his PhD thesis undergrad thesis at MIT. He can handle a log curve, no problem, right? So that's kind of what I said. Saylor, here, look, it's not just Fred. It's like Fred, Giovanni, Stephen. We have 3 PhD guys, and we think that you should just use this stuff. You don't have to credit us or anything. Just use the power law stuff in your presentation because it's accurate and you'll find use for it. That's it. So I don't think people saying Saylor's anti-model, I think nonsense, Like, the reason that he convinced his board to do this is because it makes sense. These models are accurate. And you may not like them, and you may say I'm a conehead and I'm like this math guy, whatever. I'm like, whatever. I mean, I am, but there's a bunch of us out there that are kind of math conehead guys. And, I think we bring something to the table. Let me put it that way. And, that's just who I am. But, we could be wrong. And some people have said all models are wrong and some are useful. Yeah, there's some truth to that, but also don't be too anti-model, like if you're flying a plane, like Saylor got a PhD, a BA in aerospace engineering. You're flying a plane, you need to understand how lift works on the wing, right, to keep the plane going. You need to understand the different forces of reaction and propulsion for the plane. You don't need to be a physicist to fly a plane, but you need to understand a little bit about how the forces work and what keeps the plane from falling into the ground, right? And I think here it's sort of like, you don't need to be a mathematician, but it's useful to like look at the data. And I would recommend everybody, including yourself, just to run the data yourself, right? Just build a model yourself without looking at, don't just copy and paste. Just go grab the data yourself, look at it, and start convince yourself that, oh, maybe there's something going on there. And I put that challenge to people, and I got a lot of people who were like, look at my model, Fred. You got a 97%, I got a 98. I got every single day's worth of data, and I got this, and I got I'm using block time instead of regular time. So I really think it's a question of do it yourself, learn. If you're a Bitcoiner, this should be natural to you, right? It's like, don't trust, verify. Verify the stuff for yourself. Look at it yourself. Look at your own data. Verify it. Come up with your own stuff. But I think you will find that this stuff is very compelling. That's my opinion.
Yeah, I definitely think the models are like fascinating to talk about and think about, and trying to predict, even though I think it's basically impossible to do it, especially in any short term or medium term time horizon. But trying to like think about what the price of Bitcoin could be is quite interesting to me. Maybe last question, then we can wrap it up. I feel like Saylor and maybe other people, and like this is kind of how I see it. It's like you mentioned, like Bitcoin adoption is probably 1%. Probably, in my opinion, probably really even less.
Yeah.
And we have like 94% of all Bitcoin have effectively already been mined. I think some people, including me, think that, if enough capital just comes in from outside Bitcoin and tries to buy, the remaining 6% plus whatever, existing holders sell, like, again, like you mentioned, like you're never going to sell all your Bitcoin. I think most people will never sell all their Bitcoin. So there could be so much capital chasing so few coins that all the models just break and we're off to the races. Do you buy into that at all, or do you just think that that's not really?
I think that same thing could have been said in 2013. So I think that what you're sort of, this thing is sort of scale invariant, right? So the exact same thing that you're saying, I think 10 years ago or 2014, you could say the same thing. And I'm sure somebody did, like, oh my God, Hal Finney said it back in 2010. You know what I mean? Like, so I think everybody realizes this, but I just don't think all this capital is coming in at once. I think and it's even with Saylor pushing it, have you seen Jeff Bezos buy any Bitcoin? I haven't, I haven't seen even Elon Musk buy any recently, So like, I think this is like converting. It's sort of like a religion, right? It's like, look, Christianity is pretty big right now, like over the world, right? There's probably 1 billion Christians out there, maybe more, maybe 2 billion, right? But it didn't get to be, before 2,000 years ago, there was no Christians, right? So, this thing kind of spread and now is there, right? So I think Bitcoin will take time. It's kind of a new kind of religion. It's a financial religion, right? It has to spread. People, they have to get comfortable with this idea of, holding it in wallets, and they got to get comfortable with the fact that they weren't around when, you could mine 50 Bitcoin in a block, they weren't around. They didn't pay attention, right? But at the end of the day, I do think it's a compelling religion. I think it's a compelling value proposition. I do think everybody will eventually get to it. And I think the power law is just this sort of spread that this idea has is just spreading at this rate. That's kind of what it is, right? And I think where I disagree with Saylor is this. He sort of said, well, if 6 billionaires like me buy it, well, yeah, 6 billionaires, Bitcoin's not going to go up because 6 billionaires buy it. It's going to go up because, 10 million people choose to put their savings in it. The world is not determined by 6 billionaires, It's determined by the long tail of why did stocks go up? Not because one guy buys stocks. It's because the world is now moving to allocate their money into S&P 500, right? So I think that, it's not, as much as we want to say it's Argentina or El Salvador or Elon Musk. And we want to, or Saylor, right? What's more important is the masses, right? The more important is the average Joe. And I would say what's most important right now is the average American, right? That is the most important thing. The average American who's got money in their 401k, right? Getting that person to put some money into Bitcoin, right? That's probably the biggest thing that's going to drive it, not these billionaires. Because collectively, Gen Xers and boomers like me, right, have got all the money. We collectively have way more money than Saylor does. You know what I mean? Than it is the top 1% that do have a lot. But the next 9%, really, the top 10% of Americans own 90% of all stocks. So that's kind of the thing is how do those 10% of people, those equity owners and real estate owners, how do those guys switch in their mind, how does it flip to them to say, you know what, I'm getting a little old. My kid, Joe Burnett, tells me that I should be buying Bitcoin. Maybe I'll follow Joe's advice instead of doing what my dad would have said, And so I think that's the thing. And I think it is a generational thing because I think most people your age are the guys pushing forward with this. And most people my age are the guys kind of cranky and, some of us see it like me and Larry and people like that, but a lot of us don't see it. So that's what I think. But I think no matter what, it's inevitable and it's going to work. And, I just would tell everybody, get on the train, just get on this train. Train's taking off. Whether you want to trash the model, if you want to trash the model, I don't care. Like if the model is useful to you, great, use the model. If you have a model that everything's going to pot and, that maybe that model works for you, right? Like, I don't care what model it is. No matter what, you're going to be beneficial by buying Bitcoin.
Yeah. Fred, I like this. This is fun. I could ask you a question probably forever, but thanks for taking the time to sit down with us.
Okay, Joe, it was my pleasure. And I really enjoyed talking to you too. So hopefully maybe we'll see you in Bitcoin Nashville if you're going there.
I plan to be there, so we'll connect there.
Cool. I'll see you there.
Awesome. Thanks, Fred.
See ya. Bye.